Looking at the FX space, one of the big movers this morning has been sterling. Now, we did hear that the latest EU referendum poll has actually put it a lot closer than some of the previous ones, so we did see some big moves in terms of the pound. We've also seen the likes of the Eurozone CPI reading this morning as well, so the best place to start really is euro against the sterling. This is it on the hourly time frame. You can see that largely, we have got a number of fibs on here. Let me get rid of those. We can see that largely over the last week we've been near enough range bound essentially. So we're coming back towards the top end of this range. I'd be more happy to short this than be looking to go long at the bottom end of this range, because the trend coming into it is a downtrend, and therefore I would be happy getting short around about the top end of this 76.40, you know, that kind of area. I'd be happy getting short, put my stop up above 76.55 just for a move back down towards just sort of 75.75 or 75.80 kind of region. Ultimately, if we take it back to the 4-hour chart, we can see that we would need to break up above this major area of resistance to create this double bottom. You can see not only the previous peak that we got on the 27th, but also the low that we had on the 19th. So this is a big area of resistance. We also have a downtrend in play, so therefore I would be happy to take shorts around the top end of this. You've also got the 50-period SMA around there as well. I'd be happy to take a short around here, and if it does break up, then certainly, you know, you could be wrong. But as long as you get a good risk to reward for something to be a continuation of what's been happening previously, then I think it's worthwhile for me. So I'd be looking to short it if we get any sort of further upside for a move back down towards the previous lows, and then it's a case of waiting for the breakout from this pattern and then playing it from there. Next, I wanted to look at what's happening with the Australian dollar. This has been a big mover because of those trade data that came out recently on a daily time frame. You can see that what we've seen recently is the kind of thing that we could see some sort of bottoming out, but it continues to come up to this same area. You can see we've got the 200-day SMA that has been the top of the day today. We've also got this 72.62, which was a major resistance point in the past, and we can see that it's also been playing as resistance recently. So we're in a big sort of area of consolidation at the moment. We are at the top of that consolidation. The question is, are we going to see a breakout from that? Certainly the fact that we've actually come in towards the top end of this, it's in a relatively shallow move lower. Now we're starting to post some dojis and the like, and almost look like we're about to surge higher. That is a bit of a warning sign that we could see a break through the 72.62. But I would need to see it, you know, before I actually say that I'm bullish, because we've got such a big area of resistance. I would prefer to actually short this market for another move back down towards the bottom end of this range. It feels like, given what we're seeing at the moment, it feels like there's a high likeliness that we'll get a big breakout towards the upside. But at the same time, if you've got a risk to reward ratio that is strong enough, and you can see we're above that 76.4, so we've got over 3-to-1 at the moment for this trade. If we've got a strong enough risk to reward ratio, if you can get a 4-to-1 or a like, then in my mind sometimes it's worth taking a punt, because if you're playing in the way of the trend, and certainly the trend of late has been towards the downside, then, you know, I don't think it's necessarily too much of a risk, given the fact that you can probably take this trade 4 times or 3 times, and it only needs to work out 1 time for you to be break even at the end of it. So I'd be more inclined to go short around about these levels rather than actually go long. But there is a potential that we could see a break. If we get a break up above this 72.62 kind of area, we get a convincing hourly close, then that could really sort of pave the way for a decent move towards the upside for Aussie dollar. Finally, looking at dollar yen, this has been a bit of a strange mover recently. So this is the daily time frame. The first thing to note is the fact that we've got this downtrend in play, and we've been talking about this a lot, especially we've been talking about this 76.4. Now you can see that essentially we gapped higher from the weekend above that 76.4. And if we look at it on the 4-hour chart, we can see that we had this sort of symmetrical triangle pattern in play that we were waiting for the breakout. We'd seen a number of touches on the bottom side. We'd only seen 2 touches on the top side. So I was more inclined, especially given the downtrend that we have in play, I was more inclined to think that we were going to see a break lower. And it did try that, but it failed to actually fully break that. Now we've seen some industrial production figures coming out overnight and the like, and it's been helping it on its way. But essentially we've got that gap higher over the weekend. The crucial thing here is the fact that we haven't created that new higher high in terms of the daily time frame. 111.89 would need to be cleared out for me to say anything other than I'm bearish in terms of the medium term. So yes, we have seen this break higher. That is bullish. We're seeing some sort of consolidation with a relatively minimal pullback. That's also relatively bullish. But we have to have this massive area of resistance up above 111.89, and until that's cleared out, I, in my mind, think there's a good possibility for us to reverse lower. So if we look in terms of the 1 hour chart, you can see that we failed to create a new high. Now we're selling off once more. There's quite a lot of choppiness at the moment, so it's a difficult one to be trading at the moment. We could have the potential double top formation if we break below it, 110.80, but for the time being, it's a wait and see moment for me. We have seen this breakout towards the upside, but I would need to see a break up above that major swing high for me to actually start to say that I'm bullish for this market, given the downtrend that we have clearly in play on the daily time frame.